Hey, how you doing? Oh, I can't complain, but I'm still a man, a black man I am. I lived in a land, I built things by hand. Our families were taken, our identities mistaken. For hundreds of years we shed many tears. Although it appears that our culture doesn't respect the tradition we left. And the wisdom was stolen, replaced by linoleum, floors from the windows to the wall, till the sweat drips and I'm bald. I still can't complain, and all my kids want things from the mall. Hey,
Hey everybody, welcome to BMore Brooklyn. Gilbert, take it away. I'll be right back.
What's up, everybody? Welcome to BMore Brooklyn. I'm one of the hosts, Gilbert and Bell, and Lady J just stepped away because she got to go see some things. We having a little bit of technical difficulties, but that's okay. We have a special guest with us here today, Ms. Shantae Taylor, and Ms. Taylor is going to tell us all about some financial literacy. She's going to tell us about investing, budgeting, money management, about life insurance. And I got a lot of questions about that. And I'm pretty sure you guys want to know how to do this also. So I just gave you the brief synopsis on Ms. Taylor, but I'm going to let her tell you about herself.
Oh, you want me to tell him about myself? Didn't I send you my bio? So
You gotta really, listen, this lady is talented and she has a really nice bio, and I'm pretty sure she can introduce it and say it better than I could.
Okay, so basically, hi everybody out there. Hope everyone is having a great evening. But my name is Shantae Teller, and I am a licensed financial advisor, investment advisor. Pretty much, I'm a graduate of Fairleigh Dickinson University. I have a degree in business management, international business, and I have, a few licenses and credentials, I want to say. But my passion is to teach people about financial literacy so that they can make, I want to say, educational and uniform decisions concerning their financial life. So that's just a brief synopsis of me. I really don't want to go too deep into my bio, but I'm here to just answer the questions that you guys have for me.
Okay, that's what's up. And yes, her bio is way more extensive than that. She really gave me the short version. So one of the first questions I want to start off with is like, what is the biggest setback or biggest barrier that you see when people come to you in regards to financial literacy or life insurance?
I want to say the biggest barrier when it comes to pretty much financial literacy or even just financial planning or life insurance within itself is not having anything in place. A lot of times I see people, they have a guard up. They don't like people to, how can I say, be in their business, as they say. And so they haven't planned anything. And usually they come to you at the aftermath of when something has occurred, or they come to you just at the cusp of when something is getting ready to occur. So it's almost as if the advisor is kind of caught off guard, and you really wanted to help this person, but sometimes you just really cannot help this person. So I wouldn't say timing is everything when it comes to financial planning, when it comes to life insurance. You don't know when it is going to be your time, even concerning life insurance. So that's very imperative. So I would just say timing. People wait too long. They don't want people in their business. They don't want to be exposed, and so it creates pretty much that disparity.
Okay. And you said the timing. What would you suggest a good time for people to start thinking about, their whether it be financial literacy or life insurance?
I want to say life insurance, the time is to start now. You don't really have, I know we say we have a set time. Well, I'm going to be realistic with you and very transparent. When we think about the key aspect of life insurance, many people associate life insurance with death. But life insurance is so much bigger than death. Life insurance is actually when I think of life insurance actually is the value of you as an individual. So there's a human capital value that is associated with you. You have value. We put value on everything concerning I would say electronics. We have value. We have insurance on our iPhones. We have insurance on our Android phones. We have insurance on our laptops, our cars, and everything. We don't know when we are going to need that insurance, but one of the guarantees in life is that everyone is going to die. That's just realistic. But when we think about life insurance is so much bigger than death. You have I want to say two major forms of life insurance. You have your whole life and you have your term. With that being said, I know people who put life insurance on their children at, once their children reach age 14. And the reason why they do that is because they are trying to build a value and pass a legacy on to their children and their children's future heirs. And so, because they know the importance of life insurance, because they know that life insurance is not just associated for death. It can do many things, and it is the only thing for pennies on a dollar that can leave an estate to your family. And so I want to say there is no set time to get life insurance. We know life insurance also is based off of age. It's also based off of health. So you can't determine when you're going to be healthy. You cannot, we know the older you are, the more the policy costs. So with that being said, the time to get life insurance is now. You really don't have a set time to wait. Insurance is something that you need to be thinking of when you don't need it, meaning that you don't have a guarantee of when you're going to need it. So you need it.
Right. And that's one of the key factors that I think I recently learned. It made sense. It was you have insurance on your phone, you have insurance on your house, your car, almost everything. You go to Best Buy, you buy electronic, they actually do you want insurance. So and people insure those items. So, but why wouldn't you insure, yourself? And you spoke about like it being much more than having a meaning to death. Can you tell people about that a little bit more? Like, what do you mean by it's much more than just something associated with death?
Sure. So when we think about life insurance, we think about the two major components of life insurance that most people know. Most people know a whole life insurance and they know a term. When it comes to it, the easiest way to break down life insurance, I would say, is your whole life is for your everyday life. And your term insurance is rented insurance. So when you think about whole life is almost associated with the mortgage. With that being said, when you own property, you have cash value with it. There's equity building in it. And so, and then when you have term, of course, is rental insurance. You have it for a certain time period. It has to be renewed, like a lease will be renewed when you're renting an apartment. With that being said, we know that term insurance, how it works is the insured must pass away within a certain time frame for that policy to pay out. However, whole life is very different in the sense of because it is building that cash value factor, you can use it. And I do have to state, because, I am a licensed financial advisor, that this is not an investment recommendation. Nothing I'm saying on here is just educational purposes. I do have to state that per disclosure. But what I'm saying is, when it comes to a whole life policy and you having that cash value, you can use it for many things. I know I've worked with clients who have used their whole life insurance to supplement for retirement income. You can use it as well to take some of the cash value out. if your child needs to pay for expenses concerning college, if you need to pay for expenses concerning, your child getting a car for a better future, to purchase. Some people even use the whole life insurance, some of the cash value in their policy as well, to pull some of it out to even put a down payment for a house. So there's different things that you could use the cash value for.
So we have another question here. Now, she said people that sell life insurance just sell to make money, and some agents don't explain all life insurance. And she said, I'm trying to read what she's trying to say. She said that people that sell life insurance they sell it just to make money, and some agents don't explain all life insurance. Life insurance companies look at us like a number and treat us like cookies. She said, never get life insurance as a family, husband and wife, children, and start off of getting a policy, putting your children on your insurance policy as riders. They fall off when they become adults, and then you have to restart your policy over. This is what they don't explain to you. So can you comment on that? I hope you got all of that.
Yeah, I pretty much got what she was trying to say. So that is true. I want to say, when you're working with a good life insurance agent, I do want to clarify this. Every life insurance agent is not a financial advisor. I do want to state that. There is a separation, but there still is a due diligence that anybody who's a financial professional should be conducting. With that being said, any insurance advisor that you are meeting with, insurance agent that you are speaking with, they should be giving you a full discussion on the differences of insurance, because what they have to do is they have to make sure that this insurance actually fits the mold for your life. Okay. And then another thing as well, when it comes to the insurances, yes, that is true. There are some riders out there that do fall off when the children are 18. The insurance agent that is speaking to you should specify that to you as well, and let you know, okay, we can put something in place, just because the reality situation is, if you were to purchase a child their own separate policy, it's going to be more costly. With that being said, sometimes people, depending on the financial situation that they are in, that's not feasible for them. So you do want to have something set in place just for the just in case, because the reality situation is children do die every day. But what the insurance advisor can do is they can put something in place just for the just in case, and they can revisit the situation as time goes by and says, okay, you've had a life change, some things have occurred, perhaps the family has more income that they can work with now. What is it that you would like to do for your child as far as a good head start? So whatever agent you are working with, you need to just be making sure that they are doing their due diligence. There are some agents I've heard about who have not done what they needed to do as far as for their clients. But you also as well, you want to educate yourself so that some differences, so that you can ask them some questions as well. We can't always depend, and it's sad for me to say this, but we can't always depend on people to do their full job.
And someone said that he said, what? This is DJ. I know who he is. He said, that's true. Some agents just sell to make a profit and don't explain the different plans. And then Van says, I have 3 policies. I have been in so much with all 3 of them and been with them since the 80s. It's a fine print. It's the fine print that gets to you, which is true, because some people have policies and they have not read the fine print in the policy. And then upon the time of their loved one's departure, they find out that they don't have enough money for burial. So it's a couple of things I wanted to ask you, but first is, what kind of policy do you suggest? For example, I do have policy on my son and myself, but he's 25 years old. So what type of policy, just using my son as an example, because where I live at, most of the young men don't make it out of their 20s. You know, it's sad to say, but we have a lot of crime, black on black crime here. And a lot of our young men get killed. Like, I went to New York and 5 people were shot in one day while I was up there. So not in New York, in Baltimore. So my question is, with him being 25, what kind of policy would you suggest that someone should get for that age?
So there is no one-stop answer when it comes to that. It really depends on the person's situation. But one thing I can say is you have to look at it the factor of, if they're age 25, the parent can get a policy on them for their whole life. The younger you are, when you do get life insurance, and you lock in that premium for whole life, of course, the premium will start off more significant, but in the back end, it'll be less cost with that, because the premium is set for the individual's whole life. There are different types of whole lives as well. You can do a whole life where you're paying to like the age 97 up to 100, or you can do a whole life where you can pay the policy off in like 10 or 15 years. You can customize the policy. Or of course, if it's cost efficient and you need to just put something on a loved one, you can do a term. It all depends. I say it's case by case basis. Some people layer insurance as well. When you layer insurance, that means you take a combination of whole life and the term. The term, I always say, is just for the just in case, because most term policies do not pay out. If you do the research and you research it, most term policies do not pay out. Most people outlive their term, you know, and the insurance companies, they understand the morbidity clauses as well as the time frame and when most people are going to outlive that term period. Your whole life, it is for your whole life. You know, and I always say the whole life is the gift that you leave your family, and your term is just for the just in case.
Okay. I think that's what people get confused at.
I wanted to ask, like, because I recently found some information about having putting your life insurance in a trust. Like, do you know about that, and why don't more agents push that?
So you can put your life insurance in a trust. The only thing that I would say is it depends on the situation. Sometimes there's not a need for a trust. When it comes to trust, it does go state by state as well, depending on how much the estate will be. So when I wouldn't say a good insurance agent or a good insurance advisor also as well has to know the full financial picture to even recommend putting, you know, an insurance policy in a trust. Like, if you were to put an insurance policy in an irrevocable trust, is it worth it? Is the estate worth it? You know, what is the fact and figure that the attorneys are saying? An insurance agent needs to work closely in connection with attorney to understand exactly how that trust will function, as well as also understand the tax implications will put an insurance in a trust, because sometimes, depending on the nature of the situation, is not even worth it. And usually what you will see is when you have someone who says, I'm putting this life insurance in a trust, there is that the reason why is because there is a large estate in place. So that means that that person is at a certain income bracket. Like, you wouldn't find usually your everyday person putting insurance in a trust.
And before we go any further, everybody, make sure you share the video. If you're on YouTube, make sure you like and subscribe to the page. Make sure that you let people know that we're on, and we had a couple shows on before us. So make sure you let everybody know that What Up Baltimore is on the air. And tonight we're actually talking about finances, how to save your money, how to invest it, and all of that. Somebody had a real good question, which was my next question. Let's talk about if they have health issues. The premium becomes higher, or some of them won't take you, and you better get accidental death. Now, let me use myself for an example. I had a real good policy, and about 5 years ago, I had a major stroke, and my company immediately dropped me. After a couple months, and I couldn't go back to work. Like, I was dropped from the policy, so I had trouble because after that, I had two more strokes. And I had trouble getting a policy, but like this person just said, my policy that I'm paying for, I'm paying a lot of money for it, because I don't want to go without insurance, and I want to make sure if something happens to me, my son doesn't have to dig in his pocket. But that's the other thing that I would like for you to kind of talk to us about, for people who do have any type of disabilities where or illness where they're unable to get insurance, or some people haven't had insurance at all, and they may be looking at this and realizing, oops, I better get insurance, but they have some type of illness that may preclude them from even being able to get insurance.
Right. So I just want to touch on this briefly, because I heard somebody say something about like accidental death. So accidental death and dismemberment, that is not insurance. I do want to state that is a clause. It's a clause that is connected with an insurance policy. Sometimes you'll see them, they're not connected with an insurance policy. What I find is I've met some people and they believe that it is insurance. It's not insurance. It's a rider that you put on that works in conjunction with your life insurance policy. The clause is very stringent, and it's very straight and narrow how it pays out. And so there literally has to be like an accident that has to occur, something very just very outlined, and it's they keep it very tight and very thin line what has to occur for that to be paid out. And that's the reason why you can get so much of it for so little. I just wanted to clarify that. But when it comes to life insurance, it is based off of your health. That is correct. If you are healthy, you will pay, your premium will not be as expensive as someone who is unhealthy, because they are, like I said, the life insurance companies are taking it into place of, we take you on as a client and we assume the risk of someone who is less healthy is more likely to die quicker than someone who is healthier. So with that being said, there are some companies out there, and you have to figure out which companies there are. You have to do a little bit of research, but there are some companies out there that you're not insurable. They will not take on the risk of taking you as a customer, as a client. There are some companies that will. There's a 2-year stipulation clause when it comes to life insurance, meaning that if you pay into the life insurance policy and something happens within that 2-year time frame, the company does have the right to return all the premiums to you and not pay out the death benefit. So you want to understand exactly what particular company you're signing up with. There are some companies out there as well who do extensive research when it comes to the medical. So they will do the medical, test your urine, your blood, and things of that nature, as well as go into your medical history to try to understand any factors that's going on with any conditions you may have, and they will rate you off of that. A lot of times what I do find is those companies do tend to pay out as long as there are no misrepresentations when you did the application. Companies that tend to sometimes not pay out are companies who do not do the extensive, research and, of course, the testing and the medical. So you have to really just do your research each company and just figure out which company, works best for you. And like I say, life insurance is about timing. You cannot time it. You cannot time when you're going to get sick. You cannot time when
Right.
someone's going to die. The time is to get it now. Do not wait. Do not wait.
Yeah. And Kevin, we have a question from one of our viewers. Kevin said, I've heard some people talk about final expenses coverage. This helped out a senior I knew when they didn't require a medical exam, however, was not able to pay out until having it for a few years. Can you explain final expenses benefit coverage?
Yes. So final expense is just what it says. Final expense is when you get some type of life insurance. Generally, it is a small amount, small increment. It's set in place just to pay for the final expenses of pretty much a funeral. You know, some people use them for cremation. Some people use them in the sense of burial. With that being said, like I said, there's a 2-year clause on any life insurance policy. When it comes to the final expense, a lot of times what you'll hear is they will have you pay a set premium. And within those 2 years, the insured, they're looking for the insured to, as the family is looking for the insured not to pass away within those 2 years, so that that final expense can be paid out, and any of the final expenses that are associated with burying the individual, you know, can happen. Now it is different, and it's different in the sense of, yes, it's life insurance, but it's just for the bare necessities. It's not to leave a legacy and an estate to your family. But it does help. Some people, all they can afford is a final expense. Some people, all they can afford is to pay for their funeral expenses. It's better than your family having to you know, do GoFundMe's or fry fish to bury you.
That's what I was gonna say. That was gonna be my next comment. Would it be better for somebody to do a final expense coverage because they can't really afford to keep up with the premiums for a whole term policy, or a whole life policy, or a term policy, um, to avoid that fish fry, that GoFundMe, and all of that? So, what would be best for somebody to do if they don't have a big income but they want to insure their family members?
So if they do not want to insure, if they don't have a big income and they just want to insure their family members, I would say, yeah, they can put a final expense on them. Now, something that I will say, and this is just a little nugget I'm just about to drop, and we don't think about it like this in this sense. I do know of some very well established people who the whole family will come together and they will each pay into that premium, and they will get a large policy. Okay. And what happens is, you know, say, I'm just going to use this as an example. Say grandma, you know, is going to pass away. Say grandma's in her 30s or grandma's in her 40s. I know I'm using 30s, but you know, the time that we're living in. So I feel like grandmas are getting younger and younger. But with that being said, say grandma is in her 50s, you know, and she has 5 kids. You know, each kid can come together and put in a portion of that premium to take out a large policy for grandma, so the burden is not falling on just one specific person. With that being said, when the grandma does pass away, that policy can pay out not only to pay for her burial expenses, not only to pay for any you know, say factors that she has to pay for concerning her estate. It can be used to purchase other life insurance policies. The money can be used to purchase a house, say for the family. It can be used to purchase a business, income tax free. So that is the point of life insurance. What I want people to understand is life insurance, yes, we think of it in the sense of to bury someone, we think of it for death, but life insurance is, we have to think in the sense of life insurance being set up to leave a legacy for your family. What is it that you want to do for your family? You know, traditionally, a lot of times what you will see, and I, you know, we can speak of this because we're all Black on here. A lot of times what you will see, a lot of times in our communities, And it's unfortunate and it's sad to say that I do believe that the narrative is changing. I do see that it is changing, but a lot of times what you will see is we're starting over and over again. We're starting over from generation to generation. We're not leaving a legacy to our family financially. And so it causes the next generation to start over. But you have to think about it in that sense of what would it have looked like if your great grandfather or even your grandfather or your grandmother would have left you $800,000. What financial position would you be in today versus, where you really are? So we have to think about it in that sense.
And that is so true, because I just feel like in our community, all we leave each other is sickness and bills. When everybody passes away, you don't have any money. You don't have any type of legacy that's left, no business, nothing. You have very few people. I think, like you said, some people are getting more into it where they're trying to leave something for their children, but it just needs to be talked about more in our community, to not wait until the last minute and then you putting up a GoFundMe trying to get people to help you with funeral expenses. Like, we have to get out of that mindset that it's okay to do that. That's not okay. And the $30 or $20 that it might cost to do a policy, we spend that on food. I spend that to get my nails done. So we have to decide what our priorities are going to be in life. And I think that's something. I'm glad we're talking about this today. Now, something else I wanted to ask you about is, Gilbert and I were talking about this, that Gerber Grow Up plan, and these policies that come through the mail. I get all kinds of policies, people I never heard of. They send stuff in the mail, sign it. You don't have to have anything medical done. You're just insured. Tell us about those, because a lot of people get sucked into those because they can't really get an insurance policy.
So when it comes to the Gerber plan, I know that plan is specified for children, specified for babies. But for example, for that type of plan, it's just like mostly any life insurance company. Children rarely have medical issues, medical conditions. There have been times that I have written policies, out for children. The policy is usually issued within 24 to 48 hours. It's a very quick process because most children do not have medical conditions. With that being said, generally when people take out those policies, they are taking out those policies in the sense of creating some type of legacy for their children, not really thinking of it in the sense of death. But there are some policies out there where they do come in the mail. I have seen them before. And they do say, they have the stipulation of no medical, not doing any medical background information. Those policies have a 2-year contestability like any life insurance policy. And especially you need to know if someone is not going in that back and doing any research on you, they do not know your medical condition, they do not know anything about you. Oh yeah, there's definitely a 2-year clause on it that if something happens, you should be prepared that it most likely may not pay out. So you really need to just do your research on that particular company. Every company is different. So it just depends. I would say though, when it comes to any life insurance company, I always tell people to do their research on the company, understand how that particular company functions. Because like you said, there was something you said earlier that a lot of times people don't even know how their policy works. They don't know how their policy works a lot of times because they're not doing the reading. You need to open up the policy and understand how it functions. Another thing as well, if you are getting your policy from an advisor, before you even sign that contractual obligation, they need to open up the policy and show you and explain to you thoroughly how that policy works.
And what are some things what are some key things that we should look for when selecting an insurance company to get a policy with?
I want to say some of the key factors. There are some really good companies out there when it comes to life insurance. But some other things that you want to look for is you want to look for the strength of the company. Before I became a financial advisor, I was an insurance advisor, and I got started. I feel like this is a great company. Now, I'm not telling anybody to go get insurance from them, but I'm just saying of me working for them in a sense. I worked for New York Life, and they are a great insurance company. There are just some companies out there with a strong name, a strong backing. They have weathered the storm through through the Great Depression, through the Wall Street crisis. There are some companies out there that just have strong names. You want to just research the company. There are many great companies out there. You have, I'm just going to name a few. And if I don't name these companies, I'm not saying that they're bad, but I'm just going off of something I know. Northwestern Mutual, Mass Mutual, Pacific Life. These are companies with good, strong names, Prudential, who you can research their history. You can see how long they've been in place. You can see as well, I would say do research as well to see what type of perhaps maybe filings they've had against them to see, if there's been some discrepancies in the past. The information is out there for you to research. So do as much research as possible. But there are some really good companies out there. And then there are some companies where I would say, maybe that's not, for you. But I would say, companies that have been around for a very long time, have a strong backing, have a strong name, you really want to look into those.
Okay. And so, I know we spoke about this as far as people associating life insurance with death, but the first time I got a policy outside of my job, and somebody asked a question about that, explain when the job gives you a life insurance policy. But the first time I got a life insurance policy outside of my job, I spoke to an agent, and how he put it to me was, being I'm the primary income in the household, what would happen to me if I was to pass away tomorrow? I mean, what would happen to my family if I was to pass away tomorrow? And it kind of set this light bulb on my head, like, yeah, they got to deal with rent, they got to deal with food, they got to deal with all these different bills because my income is no longer there. And that's the benefit of having a policy, because it's able to supplement what was taken away, and hopefully, my family could survive from there. How would you put it to somebody as in regards to how important it is to have life insurance?
So I would say life insurance is very important. I think that in a sense of it, and I'm happy that that agent you spoke with really did put it to you that way. What would you do? And I always tell people, especially if you have children, if you have a family, if you have a wife, if you have a husband, if you have someone who depends on you, what will your family do? And I'm just going to get real, because I believe that it's a discussion that needs to be transparent. If you were to die today, what would your family do without your income? Especially if you are the primary breadwinner of your family, because that income, it's not like a job in the sense of there's a job, we lost a job, we're going to look for a new job, and it's going to be replaced. That income is immediately gone. You're gone. You're dead. And so what does your family do? How do they pay for your funeral? How do they pay for their expenses? What's the legacy that you want to leave for your children? What do you envision your children doing? Do you want your children to go to college? Do you want your family to be able to have a permanent house now? You want to, and I always say it like this: it's hard to mourn properly when financial obligations are not in place. I have seen people not be, lose someone, not be able to mourn properly because they could not afford to mourn because nothing was set in place. Not only was nothing set in place, they didn't have the ability as well. They're being put out their house where they live. They haven't secured a house, and so, like I said, now is the time. You don't have time to wait. You don't know when you're gonna die, and I'm not just speaking this, from a standpoint of me being a financial professional. I'm speaking it from a standpoint of I as well. I don't have children, but I do have life insurance. I have two policies that are substantial that, God forbid, if something happens to me, my mom doesn't have, and that they do not have to do a fish fry. But not just to mention that, they do have something substantial that they will get some type of substantial monies that they will be okay. So you do want, especially if you're the primary breadwinner, you do want to make sure that you have something in place. If you're a man as well, what will your wife do? A lot of times I see that scenario as well. You have a man that's a primary breadwinner. You may have a wife, she may be a stay-at-home wife, and the man dies. She has maybe 3 or 4 kids. They had a house, but the home was not paid off. They don't have anything set in place to pay off that mortgage. Now comes the play of they have to make sure that they bury her husband, as well as they have to make sure that they're moving out of that house, downsizing. They don't have money to send the kids to college. They don't, so it's like a spiral effect. We want to make sure that we have something in place. And that's why I said we want to protect your human capital value. We want to protect your legacy. We want to make sure that whatever you're envisioning for your family, it actually does have the ability, at least, to come to pass.
I want to ask the audience a question. Do you think that it's appropriate to ask somebody to take care of the responsibility of burying your family member, and why? That's for the audience.
And then we have a question also from Kevin. He said, college and other education after high school can be costly. What suggestion would you give or type of account to open up for our children's education so they don't graduate with so much debt? It seems like this school debt is having a mortgage even before having a real home. And that's true. That is so true.
Do you want me to answer that now?
Yeah, you can go ahead and answer it. That's fine. Because I'm still waiting for people to comment on Gilbert's question.
Okay. So what I would say, there are, I can't really speak. I can educate you in the sense of a lot of times what people sometimes will do, and set in place when it comes to educational accounts for their children. Now, I do have to say, not investment advice, but you can look into a 529 account. You can also look into
What's that? Sorry, what's that?
So a 529 account is an educational account that is set in place. A lot of it will consist of securities, which are investments. And you can actually have this particular account, open this account when the child is young, and you can contribute to it. You can, a lot of times it's comprised of what is known as, like mutual funds and different other types of investments within the 529 account. And you can have it set in place so that the child, when they do go to college, they will have funds set aside that can cover educational expenses. Another thing with the 529 account, they have since expanded the way it can be used. So as you can use a 529 account for like a technical high school, you can use it, of course, for college and college expenses, higher education. You can use it even for, I believe, you can use it for, like, say if you're sending your child to a parochial school, the school must be accredited, though. I do have to state that as well. So that is something that a person can look into in general. And a lot of times you'll see people just opening them up for their children, for college expenses as well. There is so many different financial plans that you can put into place when it comes to making sure that your child is covered for college. And like you said, college is very expensive. It does go up. It tends to go up every year, 6% annual inflation. And so a lot of times what I see, sometimes you'll have people who will say, well, I have a savings account for my child. And I think that that's great. And I think that that's wonderful. But the reality situation is a savings account is sitting in cash many times. And so the value of it based off of inflation, that dollar value is eroding based off of time, because there's a time value associated with money. And so because of that, it does not outpace inflation. And so by the time you do reach a certain age, the growth you could have experienced with, if you would have had another financial vehicle, it usually a lot of times is not substantial enough to accomplish the goal of college. So a 529 account, a lot of times you will see people put them in place to help as far as education. And if you want to delve a little deeper further, you also have some people who will also put in a Uniform Transfers of Minors Act. That particular account, they also will open that particular account for a child if they want to pass some type of financial security, some type of financial investments to their children. As well, the difference between that is when you have a 529 account, whoever the custodian is, they do retain ownership of that particular account, as well as if the child decides not to go to college, they can as well transfer that particular account to the next of kin. So like say a sibling. When it comes to a Uniform Transfers of Minors Act, all the funds, the securities, the investments, they are owned by that child. So basically you have a custodian of that account, be it the parent. And when the child reaches the age of maturity based off of that state law, that child gets all of the securities and investments in that account, and the parent has no say whatsoever what the child does. So if the child decides not to go to college and they decide that they want to just travel the world with their money, they can do that. So it just really depends. What you will find is you will have some customers, they will set up a say perhaps maybe a 529 account, and then some will set up maybe a Uniform Transfers of Minors Act particular account. And it just depends on, I tell people most of the time, your child, and so, if most likely you have a child that's going to say, oh, college is not for me, I'm not going to do this. So sometimes people will do the 529 account to retain ownership and to retain control, because, with the Uniform Transfers of Minors Act, you have no control. Once that child is mature and the state says that they have reached that age, it has to, by law, go to that child.
Okay. Gilbert, can you ask your question again so everybody can, in case somebody's just listening, tuning in?
Okay, no problem. I see we got a few responses for it, though. So I was asking, do you think it's appropriate to ask people to help bury a family member, and why?
And we got quite a few responses. Someone said, he said, I don't, but he said, this is DJ Pot. He said, but I understand everyone is not in a financial situation to do that, so they may need help. That's why they do fish fries and GoFundMe. Kevin says, Gilbert, I'll keep it 100 with you. In my opinion, no, I think it's the family's responsibility. I agree with Kevin. Van said, me personally, I put money aside constantly for an emergency. So if in fact I passed away and I am the breadwinner, my daughter would have the money I put away to cover the bills, as well as continue to pay life insurance policies. And then we got a lot of people ask for help without going public about it. Van says, I don't spend unnecessary money. I save money for rainy days so people don't think ahead. Some people don't think ahead of their self because they only think for the day, for that day. That's true. And then Kevin says, yet at the same time, when I say family responsibility, yes, ask their church, friends, etc. Just meaning family should lead that conversation and support. And I agree with that because I think the go-to thing now is let's do a GoFundMe. Nobody thinks to have that next conversation prior to the death, or if the death is coming, start having those conversations. And even if there is no death coming, start having conversations about it. Do you have a policy? I'm single, so I make sure, like, my parents, my sisters know I have a policy in place. My son knows I have a policy in place. Have those conversations now so people are not running around trying to cook while planning a funeral. We have to stop doing that. And there's so many, if you go on the GoFundMe site, there are so many GoFundMes on there of people who have lost their children, their parents, and they are literally trying to raise money in a short amount of time so they can bury their loved one.
And I think it goes back to the same perspective of if you put insurance on your phone before your child, if you put insurance on the car every month or every 6 months, whatever, and you don't have it on yourself for your child, put insurance on your home. Like, you have insurance on all these material items that can be destroyed and there's no value. You could just replace it. You can't replace life, but you can help the people who you leave behind continue to have a better quality of life or have a stable life. So how can you not look at it from that perspective? Mm-hmm. And one of the things that, really, I like saying Peter line from Family Guy, that grinds my gears is when I see people on social media and they balling out of control, and then a death happens, and then they the ones who asking for money. Mm-hmm. That just don't sit right with me. So I'm trying to understand, like, what are your priorities? What are you trying to, what are you trying to show? What are you trying to prove? Who does this? Who do you love? What does your life mean to you and your family? Like, this is something that's why I asked that question.
Mm-hmm. And on any given day here in Baltimore, you can drive up and down the street and you see young women and older women too getting on buses with Gucci purses, Prada bags. And I'm like, you're paying all this money for a bag. And see, Shantae, Van, and some of you other women, you may know about the purses. See, I'm not going to pay $2,000 for a purse because I don't have $2,000 to put in it. So I'm good with going to Walmart, getting a wallet or one of those little shoulder bags, putting my little coins in it. But I'm not paying a whole bunch of money for a purse. Now, I went to, when I was in Las Vegas, they had a store that nothing but purses. 2,400, 5,000. You see our people in there buying these purses and getting the purses insured. Why are we insuring a purse? It can't feed me. It can't pay my bills. It can't drive me anywhere. I'm just walking around looking cute. And we have to stop having that mindset of wanting to walk around looking cute all the time, and we broke as a joke. We got to stop doing that. It just makes no sense to me. And I tell women all the time, if all you have is $25 or 25 cents, why are you walking around with a $2,500 bag? Who are you trying to impress? It doesn't make any sense. Financially, it makes no sense.
So I definitely agree with what you're saying. I think that a lot of times first of all, I think that social media has created this whole fad of unrealistic expectations. Mm-hmm. I feel like everybody, you'll have someone who will post they're riding in a BMW. Then to outdo that person, somebody will post that they're riding in, you know, maybe a Mercedes Benz that has some type of special specifications with it. Then somebody else will post the Aston Martin to outdo that person. And I just feel like, when is enough enough? You know, you have to understand one thing, and I've done financial plans for quite a few people. You know, you go to the house, they have huge houses and everything, but when you open up their full financial concept and you see the whole overall perspective, it's not pretty.
Girl,
And you know,
I
a
know
lot
you
of
want to
times,
fall on the floor when they do it.
huh?
I said, I know you want to fall on the floor when you open up their bank account statement.
Not really fall on the floor, but I just want to make sure that I'm there to, you know, I'm there to help them. I love what I do, and I really love, you know, I love to help people. And so, you know, where I come from, you know, I always say I'm a product of you know, where I come from. And so because of that, you know, I did not grow I didn't grow up bad. Now I thank God for my parents. My parents did an amazing job. My grandparents, I had an amazing family unit. But with that being said, even I didn't grow up with a silver spoon in my mouth as well. And you know, a lot of things I had to learn over time. And with that being said, one thing I would definitely say is never try to act rich. I think that people have a tendency to act rich. Why are you acting rich? Why are you trying to make it appear to be something that you're not? You know, living your reality. Living your reality. I was speaking with Lady J earlier, and I was telling her, we were talking about phones because of the type of phone that I have. And believe it or not, most people would expect, you know, because I'm an advisor and I'm this and I'm that, I have the latest this and I have the latest that. I have an iPhone, but it's not the latest iPhone. I'm not going to buy the latest iPhone. And that's just for me. You know, maybe for you, you feel like you need to do that. But I'm not going to do that until this iPhone is completely dead and broke. And the reason being is because what I pay for an iPhone for myself, I use that money, and this is just for me. I use that money, and I always, and you know, I'm not telling anybody else to do this, but for me, I go out and I buy investments. So I don't go and spend my money on the latest fad and the latest this and the latest that, because you can have a person who can buy the latest iPhone, and that's good if you want it. So you spend $1,200 or so on the latest iPhone, all well and good. Right. I can take $1,200 and go buy some investments. And in the time frame of when your iPhone is out of date, you know, and has phased out because new technology is constantly being advanced and innovated, and it comes into play, my investments that I have for myself will appreciate many times, you know, can appreciate, is the possibility of appreciating over time. And I will gain wealth. And then if I really want to, I could go buy an iPhone. Either iPhone, any type of iPhone that I want. And so there comes in the mind and the nature of priorities. And one thing that I find is the priorities have to be reprogrammed. You know, you can't, it's not okay to look like you are wealthy and you're not wealthy. You know, you want to actually be wealthy. You know, so you have a lot of times, I've even heard of some people doing photo shoots and renting cars. Why are you renting a car? You know, why are you trying to make it appear to be so, to be something that it's not? And I think that a lot of times it's pressure from both sides. It's pressure as well from social media and just the world that we live in, that people are like, well, you have to look this way, you have to be this way. And a lot of times you go and you look into their financial matters, and it's nothing the way they try to portray. So don't try to portray to be rich. Don't try to portray to be a baller. Don't try to portray that you're this and you're that. You know, stay in your lane, grow in your lane, advance in your lane. You know, take control of your finances in your own lane. You know, we got to understand the difference between an asset and a liability. You know, just because it looks good does not mean it's really adding to your net worth. Does not mean it's really adding value to you financially or your family as an individual. You know, would you rather have the latest Mercedes-Benz truck versus owning, you know, a house, a not so great house that you inherited maybe from your grandma that you have to pay some inheritance tax on? But if you fix that up and you get equity in it, what can it really do for you? So we have to change our mindset when it comes to assets, you know, versus liabilities. They're not the same. And when you just get a whole reprogramming of your mind concerning that, you'll be less likely to sit there and go buy a Gucci purse and all this and that. Right. You may buy a Gucci purse, you know, but you're more likely of saying, okay, I can buy this Gucci purse, but let me wait before I buy this Gucci purse and let me go get my finances together so that, hey, if I make a lot of money, I can go buy, you know, 2 Gucci purses. But if you just have a Gucci purse, you just got one.
The motto is YOLO. You only live once. So I need to enjoy my money right now. I need instant gratification. Why do I want to wait for the money to grow when I could show that I did something right now? You know, I live with my mother in the projects, and you know, the rent is like $300 and I don't pay none of it, you know, but I got a BMW outside that I could. So it's that image, it's that social acceptance that is confusing the priorities, because I see it all the time, you know. And don't get me wrong, like I get caught up in it too. It's like, what, you know, I'm about to flash on you too. I'm about to do this on you too. But I'm glad I have a little sense, because I'll get to the item or I'll get to the store and be like, nah, you don't need this right now. You know, let's wait. You know, so but it's so hard to convince people that these things that we're talking about is important. I think I want to say last summer, I kept returning to my old neighborhood to try to get people to invest, because this was around the time they was getting the stimulus and everything. And I'm telling them, like, just take a little bit, just start with a little bit, you know, do something, just put a little bit away at a time. And it's like in one ear and out the other. Every time I come back, did you do that? Did you do it? Oh, nah, man, I ain't get to it yet. But yeah, definitely, I'm going to get to it. Send me the information. I already sent you the information. All right, I'll send you it again. It's like we're fighting an uphill battle.
Mm-hmm. Mm-hmm. I think also, you know, we have to teach our community to look at Caucasians. You look at people that really, really have money and they walk around like they are broke. You know, scuffed up shoes, torn up pants. You would never, ever know that some of these wealthy people, and I've been around them, you would never know that they got enough money to buy a few houses and then some. But it's because they invest their money in what's important. It's not important. And you know, I'm not wearing anybody's name. I don't know Gucci. I don't know where he came from. So I'm not wearing Gucci's name. You know, I just don't. I'm not a label. They call them label whores. I'm not one of those people. If I wear a name, it's gonna be LadyJ Media, What Up Baltimore, something like that. But I'm not wearing a name, because when we have to understand that every time we wear that person's name, we're a walking billboard. We're advertisement for them. So when I wear Gucci, when I walk with the Prada purse, I'm just saying to this sister right here, she might start thinking, maybe I should get a Prada purse. All we're doing is we're advertising products every single day. And we have to learn how to turn it around and start investing in ourselves and giving back to our communities, and then showing our children how to have their own businesses, how to have your own name, your own label, you know, help them get an LLC so that they can start, you know, we can start bringing the money back into our community, because we know that money only circulates in our community for about 6 hours and it's gone. As soon as we get paid, or like Gilbert was talking about the stimulus check, I had people asking me about the stimulus check like it was a payroll check. I didn't get mine. Did you get yours? And I'm like, it's a stimulus check. It's not, everybody was running to the store getting TVs, just doing all sorts of stuff instead of taking the money, putting it in the bank or paying some bills, paying some overdue bills, getting your credit together, stuff like that. And those are the conversations that we have to have. And then when we do shows like this, or I see people doing shows like this, a lot of people don't tune in because we're not talking about silly stuff. Nobody's shaking anything. We're not playing music. We're not talking about stupid stuff. We're actually talking about things that can actually cause you to become wealthy if you do it in the right way. And so I think the conversations are important. And you are so good at explaining everything. I just have to tell you that, like, you make it so perfectly clear. For people to really understand what they need to do and how they need to do it. So thank you for that. We're actually at the end of it. Somebody said, what Black people's problem is? We are too busy being competitive, and we got to have it, we need it, and we want it. That's true. And yes, DJ Pat says, yes, people will look rich. Oh my goodness, I love this. He said people will look rich before they become rich. That is so true. See, we can learn how to shop with our dimes and look like $1 million. That's what Lady J does. She only spends dimes, nickels and dimes. Nothing costs a lot of money. And then Van says, Charlie, Lady J, some things I will pay money for. My feet. Okay, that's me, because I can't do bad feet. I can't have them looking like this. No, I can't do that. Lay all over each other. I can't do that. So I do pay for shoes because that's important to me. If they don't fit right in the store, I don't buy them because I can't do those kind of feet. And then she says, I will pay money for eyeglasses. Exactly. Your vision. That's important. That's important. And she said, my house. Exactly. Where you live is important. Making sure you don't have the best car, but that you have adequate transportation to get around, and my feeling is we have to get to the point where we stop worrying about what other people think. If you don't like my car or my shoes or whatever, like, I don't care, and I think we have to get to that point that, we focus on ourselves, saving our money, stop being, because you said something when I had stepped away that people are renting cars and they're doing videos. And a lot of these rappers, as a matter of fact, I had one on my show a few weeks ago. He was actually talking about how he's just giving money to throw up in the air and all this kind of stuff in cars. And then when the photo shoot is over, it's gone. Like he said, the money that he gets, it's going to this person, it's going to that person. So by the time he's looking at his money, he don't have anything. But the idea is to make our sons and daughters look like if you do this or you do that, you can get a whole bunch of money. So we got to really get in here and change the mindset. We really do. Van, thank you for that. That was important. That's really important. So any last words you want to leave with us, Shantae? You were so great. Oh my goodness, this was good.
Thank you so much. I really appreciate it. But thank you so much just for having me. And, if anybody ever wants to just ask me any questions, like I said, I love talking about financial literacy and I love educating people. I think that, for me, it's very imperative and it really is. It's important because of, the way I was raised, just raised in the sense of, at a young age, my parents always taught me, they said, you're going to go to college, you're going to do amazing things, and you're going to be great. And, they put such a strong backing in me to do what I do. And then as you journey through life, I met an amazing mentor. She's still my mentor to this day, but my mentor who brought me into the financial industry, Yoletta Gordon, amazing professional with New York Life, who just taught me about the business, who's been in the business close to 20 years. and just made me the woman, part of making me the woman I am today, the advisor that I am today, just, who I am today. And so I would say, for anybody who wants to do anything amazing, make sure you have a mentor, make sure you have a team, make sure you have a tribe. You have to connect you have to connect yourself with sounded and like-minded people who are where you're trying to go. They have to have already accomplished what you're trying to get to. Anybody who knows me, the majority of my circle, they've all done a lot more amazing things than what I've done. And the reason for that being is because if you're the smartest person in your circle, you have a problem. How will you grow? Exactly. So I want to say, for anybody, continue to keep growing, continue to educate yourself concerning your finances, so that you can make a wise financial decision. And also know that knowledge is not power. It is the implementation of knowledge that's power.
Right. Amen. You preached a sermon right there. That was a sermon that was good. People need to hear that. So I love talking about finances because it's something that we don't talk about in our community. And we have to bring more light to that you must, especially during this pandemic, because of all the uncertainties, we have to make sure that we're saving our money. Save your money, invest your money, make sure you take care of your children. Stop. I'm not saying stop shopping, because I probably need to call Amazon up and just tell them, look, Amazon, I'm not going to be able to do it because I'm an Amazon fanatic. I love electronics. I'm always on Amazon looking at electronic equipment. Right. But I do buckle down. Now, listen, I can save $1. I buckle down. So when I need to reach for it, it's there and I can get it. So, thank you so much. Somebody said, shout out to, this is Sean Brown. He said, shout out. Wow, the comments are coming in so fast. He said, shout out to my brother Gil. So proud of you. Thanks for sharing with the people. Sharon Baker says, thank you. Sean Brown says, love you, bro. Van says, great show. Charlene Gilbert and Shantae, great show. Kevin said, great program, very informative. And guys, before we close out, Ashina, hope I'm saying your name right. Ashina Johnson says, thank you for discussing this important topic. We're going to have her back again, y'all. We're going to have her back again.
Definitely. We need some investment tips.
Yes. Because, building a business, like I'm building a business, and there's just so many things that I need to talk about because I'm still learning, but I'm counting the coins. So, I'm very careful about spending, very careful. But anyway, before we close, everybody, I just want to say this. I had a really great, where did Kevin Curry? Oh, there it is. I had a really, really great birthday weekend. My birthday was Friday, and my son and his girlfriend took me to New York for the weekend. We had so much fun. They treated me the entire weekend. So I cannot eat any food this week because I ate the entire weekend. Okay, I'm serious. They fed me because my son said I never eat, but they fed me the entire weekend. And the greatest thing was I met Gilbert Bell in person. Shantae, Gilbert and I have been talking online for the longest, and I never met him in person. So he came to the lunch we had on Saturday for my birthday. The day after my birthday, we had lunch, we talked, we had a really good time. And it was so great to meet you in person. Like, you talk to people and it's just like, it was really great to meet you in person. And so we got to do that again. But y'all, he's a lot taller than I thought he was, or either I'm just really, really short. Gilbert's very tall.
Oh my gosh.
So my son even said, sitting down, you didn't look that tall, like when we look at you on camera.
Right.
But, he's very tall. So I told you I'm 5'1", so I'm just not, I'm short anyway. But it was a good time, Gilbert. I had a really good time up there in New York.
I did too.
Yeah, it was lots of fun. When I went back to the room, my son and his girlfriend gave me a bag and it had chocolate covered strawberries in it. I was like, oh my goodness. Nice. And then Sunday, we had they just treated me the entire weekend. So it was so much fun. I also wanted to tell y'all as well. You remember the show we did last Monday? We had a really good time with Troy Rawlings last week on the dating app. The key.
Shout out to Troy.
Yes, shout out to Troy Rawlings, the key dating app. Because after that, I got so many messages. Sean Gilbert, the messages.
The guys was on the guys was on her.
But no, yes, nobody was nobody made the cut.
Yo, you know what we're gonna do, Lady J? We're gonna show that birthday song because that was a young suitor sent her an original birthday song to her in a private message, and it was hilarious to me. It was special to Lady J. I don't want to hurt the guy's feelings. Lady J really liked it.
It was very nice. And you know what? I looked him up. He lives in New York.
Oh, wow. So
he lives in New York.
I said, brother, listen, she liked it.
So I didn't say that I would, that he was for me, but I thought it was really nice that he made a happy birthday with his little guitar, and he was just playing the guitar and singing. I thought it was really nice. And then, I got a lot of messages. I think the oldest gentleman was like 70 something. Sir, you were way like that's bordering on, my dad. So I was like, no.
Oh my God, got me choking.
But I appreciate you checking in, but no, thank you. No, nope. I don't want to feel like I'm walking around holding my dad's hand, so that doesn't really work for me. But thank you so much for checking in. That was really nice. And to all the men who checked in, did you see Van's comment? Oh my goodness.
I can't see it. You got the thing up. Oh, there you go.
Because my son came up with something last week on the show, but anyway, everybody who sent me a message, it was really nice. Some of you are just too young. You're like, in your early 30s, and Lady J doesn't, my son is 25, so that's a little bit too young for me. But thank you so much to all of you who sent messages and you want to go out and that kind of thing. But nobody made the cut yet. But thank you so much. And shout out to Troy Rawlings again. We got to have him back on the show again to do that because that was a lot of fun. So, yeah.
I just want to thank Shantae again. And also, nobody sent me a message. If you want to send me a message, you can send me a message at Gilbert and Bell Live or Facebook or Twitter, but not to go out. We can't do that. Don't do that to me. But you can send me a message.
Yes, okay. Please clarify.
Like Gilbert and Bell on Facebook or Instagram, Twitter, TikTok, at Gilbert and Bell Live, but not to go out. All right, we could talk, but we can't go out.
Van says she's sending you a message right now.
That's better.
Van is one of Gilbert's biggest fans, y'all. So, she called me and we were in New York, so she was able to talk to Gilbert while I was there. But anyway, so it was something else I wanted to. Oh, Gilbert made some BMore Brooklyn. Oh my goodness, y'all got to go to this site. Yeah. I ordered the sweater.
Nice.
Y'all got to go to this site and look at the stuff that he created, the sweaters, the sweatshirts. The one that I have on now, this was made for me. Joyce had this made for me for my birthday. It's a What Up Baltimore sweatshirt, so I really like this. And she got me a t-shirt. But Gilbert, can you get them the site information?
I'm gonna put the link in the description, but it's live in the store. It's hard to explain. It's on the Teespring site, but I'll definitely put the link in the bios in the comment section, so you guys can click on it and go look at different the different BMore Brooklyn apparel that we have. We got some nice items up there, and I'm pretty sure you can find something that you like. And next week or the week after, we will be giving away either a free t-shirt or a free hoodie. So stay tuned for that.
Yeah. And it's going to be free, the BMore Brooklyn, and it's going to be the What Up Baltimore, LadyJ Media. So make sure y'all tune in. Make sure y'all share everything. We got some really great shows coming up for the rest of the week. So make sure you continue to tune in. And if you want to do a show, all y'all have to do is call me. It's real easy to do a show on the station. And we were talking about money tonight. It's very affordable because I make it that way. It's very, very affordable. So you can definitely have a show. So Shantae, thank you so much. We're gonna have you come back on again. I'll be in touch with you to have you come back so we can talk. What's the next holiday when we start acting up? When we start shopping and everything.
We can act like the Irishmen is St. Patrick's Day. I don't know.
Yeah, because we start acting up around Easter time, Easter shopping and all this stuff.
Yeah.
But Gilbert Van says she needs a supersized t-shirt. She says she's not a one size fit all. She needs a supersize.
I got you, Van.
All right, y'all. This is Kevin Curry that we're going out on. Kevin is actually does our Veteran and Family Affairs show, and Kevin also makes our music. So y'all have a great night. Shantae, thank you. Y'all save your money. And we'll see you next time, next Monday night, 8 o'clock, BMore Brooklyn. Again, this is Kevin Curry. Let me put his name down here so y'all know who this is. Kevin.
The way a man thinks, what you're willing to show, you're willing to share. Listen, my dear, you're dressed from your toes to your hair. You're more than a body. What about your soul? The Lord is calling to make you whole. What about your soul? Take me there, Lord.
Wipe your tears. All she ever wanted to see was love. All I ever wanted was to know who I was. Love hasn't come to around.
Take me there, Lord.
Wipe your tears.
How many men walked out the back door? How many times your heart hit the floor? Here comes the lie, attacking self-esteem. Nobody wants me, nobody loves me. It's not true. But God chose you, and He loves you so much. His Son died for you. What Daddy did had nothing to do with you. What Mama said wasn't even about you. And those men, they had their own issues. Don't play the blame game. Learn to love you. Don't have a